Let's analyze the stock market trading session for today, Tuesday, April 5, 2022. This is a daily chart of the S&P 500. Today was down 57 points, and after trying to push above this very strong resistance level, failed, reversed lower, closing below the 5-day, the 10-day, and the 100-day moving average. Let's take a look at the 5-minute chart. Here's a 5-minute chart. It opened kind of flattish, tried to push higher, failed very quickly, and it kind of just trended lower the rest of the day, kind of like a mirror image of the previous day. And back to the daily chart. Remember, I told you guys yesterday it closed very strong, and I thought about buying at the end of the day, anticipating a breakout above 4,600. And I'm glad I didn't. Otherwise, I would have been stopped out today. I made that mistake back here when it closed very strong, big gap up, back above the 100-day moving average, anticipating a breakout above this same level, 4,600 and above the 50-day moving average. The following day reversed lower and I got stopped out. So I learned my lesson. So levels that I'll be watching tomorrow will be the same ones, 4490 and 4600, the same trading range. Pushes above that. Could be a good long. Below here, could even be a short. Anything here in between, I do remember mentioning also that anything here in between could be very choppy, and that has been the case. An up day, down day. So I'm doing nothing until it breaks about out of this trading range. Why? I'm looking for a multi-day trend, something like probably not the same magnitude as here, but at least something like this. I'm not interested in one up day, one down day. I'm not interested in that. Too choppy for me. I even think that today's low, if it dips below today's low, it will quickly come down to the 200-day moving average. Uh, if it gets enough momentum, might not even hold. Just keep in mind that tomorrow is the FOMC meeting, the Fed meeting, so it will be a very choppy day, very volatile day. So I probably won't trade. If the setup plays out, I will probably wait until the end of the day. Now the Nasdaq 100, yesterday had a big up day. Today was a big down day. Yesterday, same scenario as the S&P 500 closed very strong up against resistance where the 200-day moving average and the 100-day moving average merge and that pivot point, and it proved to be very strong resistance. It reversed very aggressively today, closing below the 5-day moving average and the 10-day moving average. Now, this setup looks very attractive to the downside. Hope I wish it was not Fed Day tomorrow. A dip below today's low, that would confirm a breakdown below the 10-day moving average. And I don't think this level will be very strong support. I think it's going to have enough momentum to dip below that and end up landing somewhere down here before we get a bounce. But being FOMC meeting tomorrow, I don't think even if that's the case, I don't think I'm going to trade it unless it is close to the end of the day after the Fed meeting announcement, which is around 2 p.m. Eastern Time. But this range is still valid, 14,700 and around 15,150. It's above this level, it can really get going to the upside. Dips below this level, it can really get going down south. Now for the Dow Jones Industrial Average, big resistance, the 100-day moving average and 200-day moving average. What a coincidence, exactly as the Nasdaq 100. Both the 100-day and the 200-day moving averages merged around this 35,000 pushed above that, it failed and it closed way below that. Big support around this area and above the 50-day moving average and the 20-day moving average. It is still in this range, so really nothing to do. Above here, long, below here, short. That's the way I'm looking at it. Now for the semiconductor index, this one got smoked today, back below all these moving averages. I did mention yesterday also that I believe that if it dipped again below the 200, below the 20-day moving average, that's this pink line, that if it dipped below that, it would have enough momentum to dip below this low. And that was the case today. It was down 4.5%. Levels that I'll be watching tomorrow, I really see some support around this area, 32.50, but I don't really see anything here in between until 34.50. I'm not going to be really going to watch it really because I don't really see a setup. We have 3 down days, one bounce, one day, and then a big down day. So wherever it wants to go, I'm not interested in trading unless we end up with some type of consolidation, but that will take days. Or who knows, maybe another big down day and then a quick reversal around a pivot point. Then I could probably play that bounce, but I don't really see anything set up. Not sure if you guys can see this, but this is a 5-minute chart of the semiconductor index. This one opened lower and then just basically had a big sell-off early in the morning. If you remember looking at the S&P 500, when this one was going south, the S&P 500 was going north for the first few minutes and then eventually followed the rest of the market or followed the semiconductor index to the downside. Now the Russell 2000 Iwm Etf, this one had a bad day. Big magnitude, big range. Open kind of flattish, try to push higher, found resistance around that same area that we've been looking at, this box here. Big resistance, failed. Now it is a very clear failure. As you can see back here, 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 and now I guess you can just say that it is a clear failure at that same resistance level. Reverse lower, but now it's just sitting on the 20-day moving average. This pivot point of 202.5 and still above the 50-day moving average. If it fails, if it dips below the 50-day moving average, I think momentum will pick up to the downside again, especially if we get like a bounce for a day or two and then break below that level. I think it can get very, very ugly very fast. I mean, to the upside, you're still going to have this level of strong resistance and the declining 100-day moving average, which was very strong resistance back here. Conclusion, today's price action was very bearish, reversing lower, back below, dipping below moving averages. That is still in a trading range. So going long, I don't really see a good opportunity. Shorting, same thing. I don't see a good opportunity until break out of these ranges. So I'm not a bull. I'm not a bear. I'm just going to be a spectator for now. We'll see what happens tomorrow. Remember, tomorrow will be a very volatile day. Thanks for stopping by and good luck trading tomorrow.